Have you ever seen a dollar bill framed and on the wall of a business? It used to be that a business was easy to identify. A person or a group had some type of physical location from which they provided services or sold goods. These days, businesses take many forms. A successful company could just as easily be in someone's spare bedroom as it could in a traditional retail space. Still, there are some basic elements that are requisite for any legitimate business. They include having a product or service to sell and customers to sell it to. Nothing in that formula has anything to do with the space that you actually do business from. Regardless of where your business resides, though, you can spend a lot of time preparing to do business before you ever get started. But until the actual sale occurs, there really is no business. That is why that first dollar that you may have seen is so significant to some people. It marks the milestone where a business went from the planning phase into the we're in business phase. Substantial time and effort are often put into preparing the QuickBooks file as well as part of that initial phase. And it becomes important as you enter the second phase too. The culmination of all of that hard work to prepare QuickBooks is the ability to easily and accurately record transactions as you and your customer move through the sales process. In order to accomplish that, what you need to know is the basic steps of the sales process, how to record transactions with customers, how to convert and close transactions throughout the business process, and how to distribute sales documents. I know that there are many people that do well in their own business without any formal knowledge or practical experience in business or bookkeeping. For this, we are all thankful, but when a business becomes large enough or complex enough, the need to know some of the expected practices and commonly accepted processes becomes more important. The sales process is one of those core concepts that should be known and understood by everyone in business. Without it, your ability to effectively, efficiently, and accurately manage your business will suffer. In addition, customer confidence and trust may suffer as well. Not knowing how to provide a formal written estimate, for example, could mean the difference between winning or losing a job. And not knowing how to work with purchase orders, invoices, and statements can distress your clients and cause them to lose confidence in your professional abilities as well. It may seem like recording a sales transaction would be the most simple thing you can do as part of your business. After all, finding and procuring products, defining your services, identifying leads, and possibly even managing inventory and employees must be more difficult than the actual process of recording a sale. And to a point, that is true. But leveraging the tools that QuickBooks provides to effectively work through the sales process requires a little bit of knowledge. Being able to accurately enter and track purchases made by customers is only one part of the puzzle. You need to be able to provide customers with sales documents in a format that they want. When we get down to it, it's as simple as this. If you do not accurately record sales transactions, the remaining portions of your accounting system cannot be accurate either. It is the sale of goods that is the outlet for inventory and related adjustments, and it is the sale that is also the input for cash flow. Without records of the sale, there is no income to post to bank accounts. And without money in the bank accounts, how will you know if you can pay your bills or make payroll? While many components of your business and the system are important, it could be said that the sales transaction is the keystone for the accuracy of your accounting records. And that is why knowing how to record it and record it accurately is important. When it comes to the formal theory of good business and how business works, there are a lot of experts and a lot of opinions on how to most effectively generate sales. Many commonly accepted descriptions of the sales process include 6 stages or steps. They include product knowledge, knowing what it is that you have to sell, its features, its benefits, and also about competing products, prospecting, or finding potential customers, approaching those potential customers and letting them know that you're there and you have products or services that they probably need. Actually doing a needs assessment to find out what their specific needs are so you can create a customized, personalized set of options or solutions. Then, of course, you need to make a presentation of what you can offer. And of course, none of that matters at all until or unless you can close the deal. These stages, in one form or another, are really involved in any type of sale, regardless of the product or service, regardless of who the target market will be. We don't focus on all of these in QuickBooks, although all of them are enhanced by information that we can maintain through different QuickBooks components. When we talk about working through the sales process in QuickBooks, we're talking about documenting the different stages between when a customer first makes an inquiry about, or we present an offering for, products that they want to purchase, our fulfillment of the order, and the final collection of funds related to it. In its simplest form, we can make a cash sale. A customer would make a purchase, pay for it, and take the product all at the same time. Cash sales are straightforward, and they actually are fairly common, especially in retail. But for many businesses, they are not the most common type of transaction. For many businesses, there can be a fairly long and complex process of creating bids and proposals, which customers then consider before deciding on final purchases. In these situations, an estimate can be provided from QuickBooks to document exactly what is being offered and what the expectation of the customer is as it relates to payment terms. Once a customer decides to make a purchase, then an invoice can be generated. The invoice is equivalent to the cash receipt. It doesn't have anything to do with receipt of payment, but it does provide detailed descriptions of the products or services that were purchased, what quantities were purchased, and at what prices, as well as any taxes and fees that were part of the transaction. While an invoice usually means that money has not been paid at the time of sale, it can also be used as a cash receipt. If an invoice was provided that did not require immediate payment, then some amount of time will elapse before the customer pays the balance due. On occasion, we may need to provide a statement, either as a nice but formal reminder of monies owed, or because particular customers may have multiple invoices that they want or need to pay. A sales receipt, invoice, or statement will be the final sales documentation that's provided to the customer. As a note, the Premier and Enterprise editions of QuickBooks include another type of form that we can use as part of our sales process. It's called a sales order, and it's used when a customer makes an order, but we do not fulfill the order at the same time, or we want to invoice them at a different time. A sales order is an internal document used by the company. It takes what was ordered and translates it for the first time into the company's system. The sales order is either converted to a work order if the products need to be manufactured, or to an invoice when the products have been delivered. Sales orders are not available in the Pro Edition, which is what we're using for these demonstrations. Now you have a whole lot of information about sales and sales processes and sales documents in your head. Having a basic understanding of both the theoretical and general sales process, as well as the sales process as it applies with QuickBooks, provides an understanding of not only how to use the program effectively, but also why doing so really should be considered an important and integral part of your accounting system and business processes. Once it is understood, the actual steps to create estimates, invoices, and statements is actually quite simple.